Hello and welcome to Martin Lucas Investor. My name is Sensei and you're watching the Morning Forecast Show. What a day today's going to be. We've got inflation data in less than an hour. We've got FOMC interest rate decision. We've got the dot plot from the Fed. We've got a summary of economic projections. We've got the press conference from Jerome Powell. Everyone's going to be asking about the war and oil prices and recession. This is the second to last Jerome Powell press conference. We've got ideas of rate hikes entering the market. Then we've got Japan's interest rate decision, Japan's interest rate press conference. Then tomorrow morning, we're looking at the UK with its press conference. But kicking it all off is today's show, which is about inflation. Sensei stole my plane. I was hoping no one was going to say that, and then Martin just jumped in and said it. There it is. I hope this doesn't turn into a cash in the attic. Anyway, if you don't know what that reference is, join the Discord. We had great fun in Discord yesterday. And all newsletter subscribers, be prepared because the Discord integration is coming. We've also got a date. We're looking at Wednesday next week. The training course will be out, and the integration would have been integrated by then. So a week from now, every single feature of the newsletter that was promised will be delivered plus more. So that's going to be very exciting. So this guy's very weird.
I can't believe this.
And Nick Jones 106 has become a member. Sensei stole my plane. Airplane emoji.
Sensei stole my plane. If you guys don't get the reference, you should have been in the Discord yesterday. So we are kicking off this week with 50% off for the first 3 people every day. Today we're going to up that because we've got a very big day, so we do want people, more people to have the chance. So there's about 15 places for today. So if you do want to get it, as soon as FOMC kicks off, those spaces will go quickly. If you want to go ahead and get it now, I'll give you the link. It is 50% off, which again is the best deal we do. And of course, we will be having a price increase once all the training courses are out. What that means for you guys is nothing because you're grandfathered in on the price you sign up at. So the people that sign up on the newsletter on the first week are still paying what the monthly price is now, but for the year. So you can see the prices will go up, but you guys, if you sign up, will be sticking to the price you sign up for. So 50% off your first year. The second year is the price that you'll be sticking to. So yeah, I wanted to make that clear. Now let's go to the morning forecast. And let's put in the inflation countdown. 49 minutes ago, inflation has been a real disaster over the last few reports. I mean, we've got inflation heading much higher than the Fed would like to see it go. Sensei, do that, lol. What do you mean, Paul D? Do what? What's with the background? You look like in a horror movie. Which tool you use for the first? Okay, Anthony Hales. It's a joke that started because I got kicked out of my house, and then Martin said I've been kicked to the shed. So here we are. We're in the shed. So don't worry about it. It's nothing scary about the background. Today's top stories are Oracle eyes massive AI layoffs. We are starting to see layoffs. Remember, what we saw was no hire, no fire, meaning that's what was causing the problems in the jobs market. No one was getting hired. However, they weren't firing anyone. Now we've seen Meta with big layoffs. We're seeing Oracle now with massive AI layoffs. We saw, was it Gemini with layoffs? We're seeing all these tech thinking companies doing quite large layoffs, which might have an effect in the markets. I wonder if Jerome Powell mentioned it later. So 30,000 jobs face cuts to fund expensive infrastructure and mounting debt from Oracle. Short sellers are targeting SoFi shares. Muddy Waters alleges hidden debt. Shares fell as retail investors reacted. Australia hikes interest rates again. The central bank raised rates as sticky inflation outpaces global peers, and that is a risk that is coming to a central bank near you. Specifically, the Fed in the US potentially will be starting to speak about hikes. We saw it in the minutes. I think that those rumors will get bigger today. And I think Jerome Powell himself in today's speech will mention rate hikes. Okay, let me just make sure we've got all the charts on the screen. We are going to come on to the inflation report as well. And what we're going to do is have, let me turn off that and that. What we're going to have is the charts on the screen. We're going to have Bloomberg. We're going to have the data release as it happens. It is inflation data. It's PPI data. That's coming out in 47 minutes on FOMC day. So PPI data gives us a sort of an indication of where CPI and PCE will be going in the future. So we'll come on to that in just a second. So Australia hiking interest rates. Iraq bypasses block oil strait. So a new pipeline deal allows crude exports via Turkey, avoiding Hormuz, but that will take a little while to get going. And shutdown disrupts national airport operations. Unpaid TSA staff shortages may force closures as the shutdown continues. That's not great for the economy. That's not great for growth. We saw growth at 1.4%, which was half of what it was expected to be. This is GDP. Then we got the second revision, and that dropped it down to 0.7%. So we are approaching negative GDP. If we get 2 quarters of negative GDP, it's already too late, and you've had the recession. So you can't wait for 2 negative growth to GDPs because the recession would have come and gone. Once we sort of get an indication that we're having 1 month potentially of negative growth, that's when the markets will be selling off. Wholesale inflation data drops today. So markets await February producer prices before upcoming war and tariff shocks. So the last PPI print before the war and tariff shocks take place. So we're going to come on to that. That's what we're covering 46 minutes time. If you haven't hit the like button yet, can you take a second to do so? Hit the like button, subscribe if you haven't done so already. Let me make sure I've got this opened. Okay, so let's get into the main parts of the show, which is going to be inflation. But we can have a quick look at some other stories. Obviously, today is FOMC. This is FOMC runs 2 days. The meeting is yesterday and today, but today is the rate decision. We're getting, I think it's every quarter, we get a dot plot and a summary of economic projections, which gives us tons of data that the Fed is looking at. We love digesting that data and seeing exactly what they're doing behind the scenes, just like we love covering the the FOMC minutes. The dot plot and the summary of economic projections is just as important, if not more important, actually. This is when we see what they actually think interest rates are going to go, what their projections are for the market, and it's going to be a volatile one today. So be prepared. Be prepared for the upside. Be prepared for the downside. As always, be prepared for every scenario because no one knows how it's going to go. We can go up. We can go down. We can have our own thoughts, but no one has access to this data beforehand, apart from maybe a few inside traders. But no one has access to the data that we're going to get today. We know it's going to be a pause. I have a thought just from the questions that are going to be asked and the FOMC minutes we got last time. I think we're going to have indications of rate hike conversation, which is going to scare the market. But apart from that, we don't know what the dot plot says. We don't know what the summary of economic projections are. We don't know what Jerome Powell's speech is going to say. And it can be great, and the market loves it. He can give a small indication that he goes, actually, we're not even thinking about rate cuts. That'll be great. The market will be like, brilliant. They can take a breath and the markets can go up. Just a small word like that, or the summary of economic projections could show that GDP doesn't go negative, or the dot plot that the Fed shows is no one is suggesting a rate hike. Those will all be great, or it could be bad. It could be dot plot. There's 5 members of the Fed that go, actually, by the end of 2027, we're going to have a few rate hikes. That's where we think, or we're not going to have any rate cuts at all. I don't know. It can go both ways, and what we're trying to do here is being prepared for all scenarios. So, do you have a plan? If the markets pump, are you selling? Are you holding? What assets are you in? Do you know what assets will perform well in a high interest rate environment or a low interest rate environment? Do you have cash on the side? Do you have limit orders set up? Do you know when you're going to buy? Do you have a plan? Are you going to be emotional if it goes up straight away and you're not in? Are you going to be emotional if it crashes and you're all in? Have the plan now, so when it comes to FOMC and you've got the cheat sheet by your side, so you can go one by one, walk through it one by one, you know what you're doing. Because if you're making emotional decisions at the time, that's when you're going to lose. Okay, so Dalish is like, "What are you talking about? Sensei stole my plane." Don't worry about it. Martyn made something up in the Discord stage event yesterday. If you guys have just tuned in, hit that like button, subscribe if you haven't done so already. So today's FOMC meeting concludes as the Federal Reserve navigates a strategic deadlock between surging energy costs and a weakening labor market. While officials plan to keep the benchmark interest rates unchanged, the military conflict in Iran has pushed oil prices higher, threatening to entrench 5 years of elevated inflation. This price shock arrives just as a sudden decline in February payroll signals potential economic fragility. Policymakers are now divided on whether to prioritize cooling prices or supporting employment. For investors, the focus shifts to new economic projections to determine if the Fed will maintain its path towards rate cuts. And that's that dot plot we're going to get. The decision hints on how domestic stability withstands these mounting global risks. Also, inflation. Inflation is the big thing here because the reason we're talking about global risks and oil prices because it's all about inflation. If inflation goes up, and it's already been sticky. If we go over to our, we can go over to our deep dive now. If we go over to our deep dive, we can already see inflation has been on the way up, and even PPI, which shows inflation going forward. We're getting lots of months of heading up, and if we even go to yeah, if you look over here, we've got core at 3.1%. Remember, the Fed wants it at 2%. We're heading up on PC, and PC is the one that the Fed cares about the most. 2.8% year-on-year headline. Core is at 3.1%. This is even before the Iran war. We've got PPI on January was a surprise towards the upside. It was at 0.5% month over month, and core was at 0.8% month over month. If you remember that. Oil is now up nearly double since before the war, and again, oil is not just the pump is going to be more expensive. The pump's going to be more expensive for anyone who's transporting goods, anyone who's using aircraft to transport goods, boats, ships, fertilizer, goods, apparel. Everything gets more expensive, and if everything's getting more expensive, that hits the consumer, and the consumer's inflation goes up. So we've got inflation's going up, and it's staying sticky. So how do they combat that? Well, they raise interest rates or they keep them where they are at. So we can't be blind to the fact that inflation is going up unless the data starts suggesting otherwise. Unless today's PPI comes in really cool and we go, actually, maybe tariffs is fading away. That tariff is fading away. This is going to be a short war, and the Fed is going to look past it and go, actually, this is only a couple months of bad data. We're not going to change policy just because the war went on for a month and oil prices went up. And that's just short-term volatility. Like when I spoke to Michael Burry, that's what he said. Short-term volatility it was his case about 3 weeks ago. I don't know if it's changed now, but that's why you need to be prepared for both scenarios. But right now, we need to see the data, just like the Fed watches the data. What's inflation showing today? Because this is before the oil spike. So this is the underlying inflation. If inflation is going up even before the oil spike, then God help us when oil and the war shock actually comes into inflation. So we will be watching that. 40 minutes to go for PPI, and the good thing about PPI, it gives us sort of a forward look into like what CPI and PC will be in a few months' time, or at least the underlying, because obviously we're going to have that shock in the market. So let's start off with what's going on. So PPI cheat sheet. If you sign up to newsletter right now, it's 50% off your first year. You get all the perks and benefits. If you do it now, yeah, you get that 50% off, and you can get access to these cheat sheets. We do them for every big data event. You also get access for the upcoming one. We're going to do one that's going to come out in a few hours for FOMC. So the link is pinned. The link is in the live chat. It's limited numbers. So once we hit the limit, we're not doing any more, and it's limited time only. So you can click on the link, choose the annual plan, and then you get the 50% off. 3 years ago, 3 years ago, this was a way better show before he came around. Me, so, Kevin Kennedy. I hope Martyn isn't giving a big what's going on. Kevin Kennedy, I think your comment doesn't actually even make sense. What are you even on about? Like Kevin, you don't have to buy a cheat sheet, and I don't know what you mean by a program. feel free not to and do all the research yourself. Feel free to spend 8 hours researching uh, portfolio challenges. Feel free to spend 4 hours researching cheat sheets. Feel free to spend 4 hours writing a daily newsletter. Feel free to sign up to 5 or 6 different news agencies so you can get the news. Feel free to keep watching other people's ads and their political biases and what they're paid to say. Feel free to not be part of the Discord community. Feel free to not message me. Whatever. You don't have to buy the newsletter. I don't even know what you're talking about. If you think it's rubbish, why are you even here? You're a member for 3 years. I don't even remember your name. Member for 3 years. That is actually nonsense because I know everyone who had a 3-year badge. Um, never seen your name before. Never seen your name before, and if you had a 3-year badge, you would be part of um you would be part of the founding members group. Um Whack a troll soul coming on soon. Do we have it? I think I've lost the connection to it. Where is it? Let me see, is it this one? No, that's not the one. Oh, it's not that one either. Oh, sorry guys, I don't have the song. That's the ending song. We need to play that more often. Anyway, we won't let that distract us. I just found it was a pretty funny comment. Get your own show, bring Martyn back only. You can watch Martyn's show, you can watch my show, you can watch all our shows. That's enough of that. You don't have to pay for anything, it's your choice. Exactly. Thanks, Kevin. Bye. Wacky troll. You guys watch. I have proof I'm not a troll. Okay, Kevin Kennedy. Give us proof that you've been a member for 3 years. I've never seen your name before. I've been here for 3 years, never once seen you. And if you actually had a 3-year badge or a 2-year badge, you'll be part of the founding members group. Anyway, let's continue. We've got 35 minutes into PPI. That's just that's actually quite a funny comment. Why is that made me smile? It's just it's just such a random comment and it doesn't make any sense. Anyway, the February producer price index drops today at 8:30 a.m. Eastern Time, just hours before the Federal Reserve announces his rate decision at 2 p.m. Eastern Time, when Chair Powell holds a press conference at 2:30 p.m. This is the last clean inflation reading before Iran war shock and the new global 15% tariff hits the data. It also lands during a government shutdown that delayed this release by 6 days. With wholesale inflation running hot, jobs falling off, and oil above $100, this number feeds directly into the stagflation debate that will dominate Powell's press conference later. So let's we don't have time for this. We're here to learn. Yeah, that's what we do in our morning shows. We like to get more information. I learn every day, and hopefully everyone here learns every day. If someone comes in and thinks he knows everything, that's not very good, is it? You never. There's always more to learn. If you have just tuned in, guys, please hit the. I was around for Market Profit. I knew him. I spoke to Market Profit a lot of times. We agreed a lot on a lot of things. I remember Market Profit. What do you mean I wasn't here when Market Profit was here? He disappeared, but yeah, I was here. We did a lot of conversations. Okay, Kevin Kennedy, show me your 3-year badge, and then we can move on. In fact, I'm just not going to look at the chat because it's just actually boring now. Kevin Kennedy, you literally don't. If you remember, I mean, everyone can see. You can see. This is how ridiculous it is. Everyone can see their badges. Dalish, at least 6 months, coming up to a year. Endless Motion, 6 months, 6 months to a year. We've got Binky Bonk with his 1-month badge. Kirk with his 2-month badge. You can see how many years or months someone has been a member. It's on a badge. Literally look at your name. You don't have any badge next to it. Somehow you've become #1 messenger because you've just been messaging a lot in the chat. So yeah, it's ridiculous. Anyway, we're moving on. If you had a badge, that's the beauty of a badge. We have a great community here. If you have a badge, we know you've been a member for however long. And then you get more perks the longer you've been a member, as I was talking about, the founding members group. Anyway, let's continue. So let's set the scene. What are we going into this? So remember, if you just tuned in, 32 minutes until inflation report. Later today, FOMC. Later after that, Japan interest rates. After that, the UK reports interest rate decisions and has its press conference. So it's FOMC day. I'm here to make money. This idiot is bad, says Martyn, Lucas Investor. Thank you, Martyn. Don't be sorry. Yeah, we're here to make money. That's enough of that. This is FOMC day. Let's get back to business. The economy is stuck between a rock and a hard place. Inflation is sticky and it could be getting worse. Growth is slowing. We've seen growth come down, GDP half and half and half, and the late market posts its worst month in years. We've got Fed funds rate between 3.5 and 3.75%. Non-farm payrolls was negative 92,000. Unemployment rose to 4.4%. We've got GDP, which was supposed to be 3.4%. It came in at 1.4%, and then it got revised to 0.7% at the second estimate just a few days ago. And then February CPI came in line. It was in line, but it was still pretty high. 2.4% year over year, 2.5% core. PCE came in highest in nearly 2 years. Imagine that. 2 years we're trying to bring inflation down. And then now we're the highest we've been in 2 years on PCE. PCE is the most important one. That's what the Fed looks at. That's what the Fed watches. That's what the Fed wants to see at 2%. So that hit 3.1% and 2.8% year over year. January PPI, our last PPI report, was an absolute blowout. 0.5% month over month versus 0.3% expected. And then core, which was crazy, was 0.8% month over month compared to 0.3% expected. Trade margins surged 2.5%. Today, let's see if it's going to add to that 0.8% month over month, because that would be pretty crazy. What else do we have? Brent crude was at $65 before the Iran conflict. Now we're looking at between $95 and $105 for oil. So that's pretty much nearly doubled or gone up 70-80%. That's not going to be included in today's number. So be aware of that. If you see inflation go up today, you'd be like, oh, it's just the oil, the oil spike. Well, that's not actually even included yet. So that would be another shock next month. It won't be a shock because we know it's coming. We just don't know how much it's going to affect PPI, CPI, and PCE. So the Iran conflict energy shock is not in today's number. February PPI pricing was collected around February 10th to 13th before Operation Epic Fury began on February the 28th. And the new tariff, February 24th, and the new tariff. So we don't get the new tariff, the 15% or the 10% or 15%, whichever one it is now. We don't have that included, or Operation Epic Fury, because the data was collected about 2 weeks before that. Next month, we definitely will. So what else do we have? This is PPI final demand. So you can see on this chart, it goes back to March of 2024, the month over month numbers. You can see very much always increasing, which is what you expect. Inflation will go up, but not at this rate. So wholesale inflation cooled through mid 2025. If you look at the middle of that chart, you can see it came down and it was cooling, but then it reaccelerated into the year end. December, January both printed above 0.5, the hottest back-to-back reading since early 2024. Today's February number, consensus is plus 0.3%, will show whether the reacceleration is holding or fading. And we got that information from Fred. What is PPI? Another one bites the dust, another one bites the curb. I've invested 700,000 today, says Martyn. Let's make money. Bye bye, troll. I love it. I love it. Yeah, today's about making money. Haters equals biggest supporters. Nobody has my badge, says Songs for Space. It's been like almost 2 years, says Songs for Space. Yes, you will see that switch to 2 years soon. Feels like 2 months. Yes. Gone quickly. Hold my beer, Songs for Space, says Thomas Monroe with his 1 year badge. Who's going to hit 2 years first? Okay, let's continue. If you guys have just tuned in, 28 minutes from inflation report ahead of the FOMC, please do hit the like button, subscribe, share this out if you can as well. So what is PPI? Remember, they've got 3 measures, PPI, CPI, PC. What is PPI? Well, PPI measures the average change in selling prices received by domestic producers for their output. Think of it as wholesale inflation, what businesses are charging each other before anything reaches the shop itself. it runs 1 to 3 months ahead of consumer prices, and this is why I love PPI. It's just like you can a little look into the future, because this will feed ultimately into the consumer, and the estimates are between 1 to 3 months ahead of consumer prices. Crucially, several PPI subcomponents actually feed directly into PCs. So some of the things that is collected is the exact same thing that's used for PC. So you can make those adjustments as well. So and that's the Fed's preferred inflation gauge. A hot PPI today could trigger immediate upward revisions to next month's PCE estimate. And obviously, PC is the one that you want to bring it back down to 2%, and PPI will affect that estimate, the consensus, the market will start pricing things in. So, headline PPI, final demand. What time does the report come down? Ganna, what report? Are we talking about inflation? Well, you can literally see a timer below me. I can't really point at it, but you can see 26 minutes and 55 seconds. That's when the inflation report comes out. And let's make sure we've got this. Yeah, we've got the market heading down into this right now. Crypto just had a sell-off, and the S&P 500 seems to be following suit as well. So we'll keep an eye on that. We've got Bloomberg here. Go up to date with Bloomberg. Let's put them. Is that good? Yeah, we'll leave them there. Okay. Month over. So headline PPI. This is there's two. It's very simple today. Actually, there's only two main numbers coming out. So when that report comes out, we'll go over to this screen here. Let me just remove that for a second. We'll go to this screen here, and actually, we don't need that one anymore. Why is it still there? Let me just refresh it. There we go. So let me filter this and just get the US. I just want it to be as clear as possible, so when everyone sees it, it's very clear. So let me apply those filters. There we. Oh God, 11 a.m. There's something coming. I don't really want that on the chart anymore, but it's fine. Let me move that. So you see all the ones that are coming out in 26 minutes. Everything that's just above my head. These four numbers here. You can see if we'll go all the way to the left, it's coming out in 26 minutes. That's PPI index month over month February, PPI index year over year February, and then you've got the core. So the PPI excluding food and energy, PPI excluding food and energy year over year. The most important, if you had to pick one, what's the most important? Is the one directly above my head, which is the PPI core year over year. Consensus is 3.7%. And as always, these numbers above my head 3.7%, 0.3%, 2.9%, 0.3%. Those four numbers, the more you move away from those numbers, so if you go to really low, 0%, or 2.4%, or 0%, or 3.1%, the further you are away, or if you go higher, 0.8%, 3.5%, 0.6%, 4.2%, the more you deviate, the bigger the move is, because that's not what's priced in the consensus. The closer you are to consensus, the less the market will move. And the further away you are, the more it will move. Depending which way it goes, we'll come on to that, and how much you need to look out for it. We'll come on to that as well. But these are the numbers we're looking at. Only four numbers today. We don't have jobs data coming out, this coming out. It's all inflation coming out in 25 minutes. So very, very simple. Smash the likes. Everyone says Silver Days XRP. What's your thoughts on stable off core corp? I don't have any thoughts on it right now, Chris. Once we get the Discord integration going, you can always send articles, and you can send stock reviews, and we can try to do them in the newsletter Discord integration. If anyone's just tuned in and you want to grab it before it ends, before we hit the limit for today, we've got the 50% discount on the newsletter, so you can grab it while it lasts. And then we've got the date set now. By next Wednesday, next Wednesday, the training course is released. That will come with its indicator, and that will also, the Discord community will be integrated by then as well. So that'll be all the features of the newsletter, and then that's when you won't see these prices ever again. And again, you always get grandfathered in on these prices. So whatever price you join at is what you stay at. Okay, so that's where we're going to come to the data. We're going to have Bloomberg ready for us over here. They will give us some more context within the numbers. But in the meantime, let's continue getting prepared for them. So headline PPI, final demand. That's what we're getting. The consensus is 0.3, prior is 0.5. We'll see it in the table in a second. So January was a significant upside miss. January, we spiked on inflation more than anyone can expect. Economists are calling for a return of stable 0.3%. But the same forecast missed badly last month. the range is tight and on the upside, meaning anything above 0.3% counts as a beat. So what we've got here is the table you get as part of the cheat sheet. You can always have this in front of you if you've got the cheat sheet, plus you get all the other benefits of the newsletter when you are a premium member. So I don't mind sharing this on the channel because there's all the other perks everyone gets. So I'm sure no one's annoyed. Anyway, headline PPI. Hot would be anything above 0.5% on the month over month and anything above 3.2% on the year over year. This is headline PPI, not core. This is headline. That would be a second straight blowout. Inflation is reaccelerating. January was not a fluke. That's not what you want to see if you're bullish on the market. That could send the S&P 500 down 1 to 1.5%, and it can continue. And what's more important is actually if we go down another 1 to 1.5%, we can be putting in new lower lows, and the structure of the S&P 500 will be confirmed that we are going to be entering a pullback or a bear market. But this could certainly, if we get hot inflation and we drop 1 to 1.5% going into the FOMC and we get another piece of bad news, that will be a lower high on the charts. When you look at the S&P 500, you can already see it's topped out. Let me remove the indicator for a second. The indicator is actually bearish as well right now. But yeah, if you look at the chart, we've topped out. Look, we've topped out. 7,000 was a top. We've hit some support. We're bouncing for now. We've put in a lower high, but if this reaccelerates and we get a bad inflation print, not only will we be 1 or 1.5% down on the day, no big issue if we're down 1.5 to 1%. But what actually changes is the structure. We confirm this lower high, and then there will be a lower low, and then the momentum shifts to a drawdown, a pullback, potentially a bear market. So that's the bigger issue. If you're in a downtrend and you get more information to confirm the downtrend, then more people will go, actually, yeah, there is issues in the market. So we could sell off, but more importantly, it could confirm the trend we're in. Bitcoin will probably come back down, and unfortunately, that rally we're seeing might fade. And then we've got the yields there. If it's just a little bit warm, 0.4% or 3.1% on the year over year headline PPI, that's above the top of the forecast range. It will be uncomfortable, and we will see generally a weakness in the market, but that's not sort of, the FOMC can very easily overturn that. In line, again, it's everyone will take a sigh of deep breath, but then they'll look back on it and go, inflation is pretty high and we're still sticky at 2.9% year over year. So it's relief, but it's not a celebration. We will see that filter into the market. So we would need other good news to really move us. So that will be when the markets are pretty flat, and then it's all about what Jerome Powell says. And then if we get it cool, if we get below what consensus is, what 0.3% year over year, sorry, 0.3% month over month, 2.9% year over year, if it's really cool, or if it's cool between what 0.1% and 0.2% on the month over month, remember this is headline, not core, and 2.7 to 2.8% on the headline, then it will give some relief. It will give some relief from the January terrible PPI report we got, and we'll get a relief rally. We'll be maybe up maybe up to 1% up on the markets on the S&P 500. That could help the breakout for Bitcoin and XRP, and that can confirm that breakout we're sort of seeing on the crypto. Again, we're seeing a little bit of a difference between the stock market and the crypto right now. Crypto, so as I always say, crypto sells off first, then the stock market, but crypto can certainly have big bounces in between, and crypto will recover first. So if there is a recovery, crypto will continue, will lead that. And right now we're seeing potentially crypto lead that. And if we do get that cool inflation, then it can really push the crypto market up. And then if it's cold, if we're getting less than 0% month over month, less than 2.6%, that's a significant miss to it. That's a big deviation to what the consensus was. And that will be a strong rally. There's nothing really bad about inflation being really weak unless you get a negative inflation all the time, and then you've got a different problem on your hands. But if we're negative on the month over month and we come down a significant miss, there's not really anything negative about that. That would just be a strong rally, especially in rate sensitive sectors, and then we can stop talking about rate hikes potentially, and the market will like that. And we have to do the same for core PPI, because if you remember, I showed you on this chart, we've got 4 data pieces coming out. We've got PPI month over month and year over year, which is what we just looked at. So remember, 2.9% is the year over year consensus on that, and 0.3%. The lower, the better, the higher, the worse. Worse it is. And then we've got the same story for core PPI, but the consensus for that is already much higher because core is higher right now. So same story for core. But this is more important. Core is the number that the market values more because it takes away the volatile sectors. If you guys have tuned in right now and you're enjoying what you're seeing, hit the like button. We're 17 minutes away from inflation report. We'll be covering the FOMC later today as well, and the cheat sheet will be coming out for that. If you haven't subscribed yet, please do so you get notified of our. I don't know if it's been posted yet. Let me have a quick look. See if I can give you the link. No, it hasn't. That's fine. Yeah, we will give you the link in later today on the FOMC report, and you can join us there when we'll be covering Jerome Powell. The dot plots, the summary of economic projections, all of that is to come. But right now, we're starting our day off with inflation data. So let's see if this sets the right tone for the rest of the day. We are running 50% off on the newsletter to celebrate the launch of the training course and the indicator and the Discord integration, plus all the other perks, the daily newsletter, the cheat sheets, the £5,000 portfolio challenge, the net worth tracker, the private DMs. You get it for 50% off right now ahead of FOMC. So if you get it now, you get the FOMC cheat sheet as well. You can always go back and get all these cheat sheets as well. It's all in the archive as well. What did Japan do? Japan is doing it later today. Early hours here in the UK, late hours in the US. Japan is not reported yet. So we've just looked at headline. Now we're looking at core. Core is more important, and the consensus is higher. So we just seen, if we come over here, this is the number that matters most. January's 0.8% month over month was more than double the forecast. So we got some really bad data in January. And it was the hottest reading in 6 months. A return to 0.3% would suggest January was an anomaly driven by trade margin spikes. Anything above 0.5% would be a serious problem. So, core PPI, remember this excludes food and energy. If we get a number above 0.6% again, and that would mean year over year inflation in the US, and we'll hit PPI 4%. Okay, look at this. Poor man to rich man's just sent a super chat in. Let's listen in.
At Poorman to Richmond tipped $1.99 through super chat. Going to earn 01 XRP on meth. Thank you for everything.
Thank you very much for man to rich man. Love it. I hope we see you later in the FOMC. Brilliant. Thanks for that. So core PPI, if we get 0.6% plus month over month, 4% plus, then that's when stagnation fears will intensify. That's when we can get a sort of a genuine inflation problem where what does the Fed do? Do they raise rates to combat inflation, or do they keep rates where they are right now to support the jobs market? Not only the jobs market, it seems like GDP needs it as well, and growth is concerning as well. So that's stagflation for you, and that would be a sharp sell-off. That would be 2% sell-off in the S&P 500. That would be a crash in the crypto markets, and that could seriously intensify what is beginning to look like a correction in the market. If it's hot as well, if it's warm at 0.4 to 0.5%, that's not brilliant either. That will be between 3.8 and 3.9% year over year. That's still elevated. That would suggest the January trend is pretty much intact, and we'll get a mild sell-off on that as well. So that's when rate cuts will not really be priced in at all. If it's in line, if it's what consensus is, 0.3%, 3.7%, that's a meaningful cool down from January. It's modestly reassuring. Maybe the markets will move up slightly going into the FOMC report if we're at consensus. And if we're cool, if we're down around 0.2%, 3.5 to 3.6, that's a strong signal that January was just an anomaly and the rally can grow, especially in the growth stocks, and it's great for crypto. And if it's lower than that, then the rally would intensify even more. We're going to look at the subcomponents. These subcomponents, Bloomberg will go through. Trade service margins surged 2.5% in January, accounting for the bulk of the core beat. Professional and commercial equipment wholesaling jumped 14.4%. Consensus expects a correction. If margins stay elevated, it signals persistent pass-through of tariffs and input costs and directly affect the PC outlook. Healthcare services is a something else subsector of the PPI that we're looking at. These PPI categories are direct inputs into the Bureau of Economic Analysts (BEA) calculations of core PC. Remember, certain elements of this inflation report will be going directly into creating what PC is, and PC is what the Fed wants at 2%. So a hot healthcare print could push next month's PC estimates higher, regardless of what headline PPI is saying. Portfolio management scenes another direct PCE input. If equity markets rose during February reference period, these fees mechanically increase. Energy, it fell 2.7% in January. Some bounce back expectation expecting February, but the big energy spike from Iran will not appear until March. So we're not getting that energy spike. And it's actually quite good because we get more data to see what's actually happening underlying before we get the volatile aspects of the war. Let's just go over to Bloomberg.
Carlo on the program a little bit earlier. The president just moments ago on social media asking when too late Jay Powell's going to cut interest rates. Based on the headlines coming out of the Middle East, not anytime soon. This is the latest from Axios. They're reporting the following. If you're just tuning in, welcome to the program. An important development in the last 40 minutes or so. According to a senior Israeli official from Axios, the Israeli Air Force struck the largest natural gas processing facility in Iran, located in the southwest of the country. The strike was carried out in coordination with and with the approval of the United States. As we get more information on those strikes, equities just pulling back from session highs and now just about unchanged on the S&P 500. Likewise on the Nasdaq, turning lower on the Russell. In the commodity market, Brent crude elevated, reclaiming 105.
Breaking news, guys.
On Brent this morning.
Yeah, a real question here about Brent, about WTI, but also liquefied natural
markets
gas.
pulling
over
back.
in Europe,
A massive hit on Iran. Israel
as this was the biggest
has done a big hit on gas facilities, the largest
it did
one.
Share this field with Qatar, and it goes to the question of at what point do you get something more than just storage facilities that are too full, storage facility, the actual production lines that have to be restarted, but then the extra layer of production facilities destroyed, production facilities rendered not in use anymore. And that, I think, is what's getting a lot of people concerned.
105, Brent says to me the market is starting to wake up, that actually less energy will be coming out of the Gulf, coming out of the Strait of Hormuz anytime soon. When energy facilities actually start getting hit, now you have to add in another risk premium. And there is the USS Tripoli on its way to the Gulf. This is an amphibious assault ship. Those men could potentially be used to take over Carg Island. Not saying they are, but now you can start to see if they're willing to hit energy facilities, potentially this could come next.
You wonder what the next steps are. So gas prices in Europe, European gas prices starting to climb higher as you get that bounce in energy, you get that pullback in stocks. That's the price action. Let's get you some morning calls. First up, Citi raising its price target on California resources to 67, calling it a quote.
Okay, there was some breaking news for you guys. That was the largest. Israel has struck the largest gas processing facility, and reports now that maybe we're going to get boots on the ground on Karg Island, the choke point for Iran. That would be not great for the markets. But right now we're seeing, we believe to see, global economic risk is increasing. Yeah, that is why the market's selling off right now. We've just got those reports coming in, confirmed now that Israel has struck the gas facilities. And again, that's going to send prices up higher. For gas, European prices are going to go higher. That's going to affect the consumer a lot. And the central banks around the world will be watching this. And Jerome Powell will be questioned on this later today. And there will be an effect on the market depending on what his response is. And inflation is certainly going to take a hit. And if inflation goes up, rates stay sticky, rates go up potentially, we might have a stagflation clause and we could have recession, we can have drawdowns. We need to be prepared for those scenarios because this doesn't seem to be getting any better. It seems to be escalating, and now there's reports that these naval ships are approaching to have boots on the ground. So let's keep an eye on that developing story, and we're going to go back to our inflation report because that's coming out in 8 minutes. If you have just tuned in, hit that like button. Subscribe if you haven't done so already. If you want the 50% discount. It's limited time. You get access to all the perks and benefits of the newsletter. Remember, it's not just a newsletter. It's your daily briefing. It's your daily charts. It's the indicator. It's the chart course. It's the portfolio challenge. It's hours and hours of time saved, so you can benefit from it. And right now, to celebrate the launch of the training course and the indicator and the Discord integration, the final piece of the puzzle of the newsletter, you can get 50% off and get grandfathered in those prices. Chevron hit all-time highs early this week. Okay, you can see the markets are selling off. The S&P 500 has turned negative on the day now, heading into inflation reports, heading into FOMC, the second to last for Jerome Powell. Okay, and this is when it gets important. So we've looked at headline PPI, we've looked at core PPI, what to be prepared for if it goes this way or the other way. Remember, I don't have a crystal ball. If someone comes on and says, I know what inflation's going to do today, well, why are they on? Why have they not put the biggest bet of their life on it and made millions overnight? The point of this is 2 points. One is be prepared. If the more information you have and the more you understand these data releases, the more you won't react emotionally, the more you can potentially trade these events if that's something you choose to do. And also, what I find more important about covering these events, we become more knowledgeable on these events, we understand the data more, and then that can lead into understanding the markets more, not being as as emotional, understanding specific sectors and stocks more, and also knowing where your thoughts are for the next 1 year, 6 months, 3 years, where you want to be positioned in the market. So it's not all about what's going to happen today. I'm only going to get rich by going long or short on this event. It's also about let's understand this event because this is going to affect our portfolios for the next few years. People are what we're going to get today, the next few inflation reports are going to suggest where rates are going to be at the end of 2027 and beyond. So very important we keep an eye on what inflation's doing, what PPI is, how it's moving. When you put them two together, what is PC? How is that different to CPI? What is Jerome Powell going to say? What does the FOMC minutes say? What is the summary of economic projections? And that all sounds too much. But when you break it down step by step, we have these newsletters, we have these shows, it becomes easier and easier to understand. And then we start acting like these hedge fund managers. We start having the knowledge that these people have. It's not hard to learn. It just takes some time and some patience. And controlling the emotions along the way. You need to make it through it. There's going to be bombs hitting you, people shooting at you. As long as you make it through it, you're going to come out on the other side as a real winner. Okay, now we put the two together. So let me just remind you, this is quite a simple report today because we're only getting inflation. We're getting PPI. This is how we see what inflation is going to be in the future. Of course, this doesn't include oil price shock or the anything to do with the war or the new tariff because this was collected at the beginning of February. Remember, we're in March, we get February's data. In a few weeks, we'll get March's data, which will include the oil shock. But we're only getting inflation. Headline PPI, which I love PPI because PPI gives us a forward look. It's what it's what the wholesale inflation is, what businesses are charging each other, and that normally comes through to consumers in about 1 to let's keep an eye on this. Yeah, the S&P 500 falling now. It comes through to consumers in about 1 to 3 months PPI. So we looked at headline. Headline is it includes volatile sectors such as food and energy. Consensus, the more you move away from consensus, the bigger the market move is. Consensus is 0.3% year over year. Month over month, and 2.9% year over year. The higher it is, and if it's above 0.5% month over month and above 3.2% year over year, that's when the S&P 500 can drop quickly, and then it can reaccelerate if Jerome Powell says a few things about rate hikes, which we are expecting him to address, and also address the oil shock, and also address Australia, who's just raised rates. If it's cool, close to 0%, but below 2.7%, that's when we get the relief rally and we can head up on the markets into the FOMC report. Now, core is a bit more important. Markets will look at core a bit more. And we looked at it. In line is 0.3% month over month, 3.7% year over year. The further away we are to that, above that number, such as above 0.6% month over month, 4% year over year. Imagine that, 4% inflation year over year. That's when stagflation fears intensify and we get that lower low on the charts, the structure changes. and we can be heading into a broader correction, or potentially a recession or a bear market. If it's cool below around 0.2% or below 3.5%, that's when we can go bullish into the FOMC and wait for Jerome Powell's remarks, press conference, dot plot, summary of economic projections. Guys, if you have just tuned in, I know a lot of people are here, but no one's hit the like button, or some of you have, the Lucas Eds have. Guys, it takes a second. Hit the like button. Efton, yeah, you've got a question. Hey, Sensei, we don't leave anyone behind, so I'd like to answer all questions. Hey, Sensei, I have a couple questions. Is the premium membership an annual payment? Yes. So if you use this link, it is an annual payment. It works out to about 30 cents a day, $2 a week, something like that. So yes, it is an annual membership. And he said, is the premium? Yes, so it's annual membership. Yes, it is. And is it renewed yearly? Can I unsubscribe anytime? You can unsubscribe as soon as you sign up. You can unsubscribe halfway through the year. You can unsubscribe until the day of the renewal. You will get an email reminder 7 days before your renewal is due. You can unsubscribe. Yes, very easy. We don't make it hard. It's literally a click of a button and you can unsubscribe. So yeah, and that's the 50% discount there. So let's get into it. 1 minute and 50 seconds to go. Let's get that inflation report. You put the two together and we'll look at it. Are we going to get best case scenario? Core at 0.2% or below and headline 0.2% or below. Goldilocks, January's terrible inflation report was just noise, and that's the strongest case for getting a rate cut back on the table in June. Worst case scenario, core is above 0.4%, it's hot, and headlines above 0.4% month over month. That's stagflation, second straight increase, and risk off across the board. We've looked at this. We've got the positioning of the market. All newsletter premium subscribers get access to this. We're covering FOMC later. We'll have the FOMC cheat sheet. 99% chance of a hold for today, but it's important to see what the decision is, the summary of economic projections, the dot plot. I'm going to be breaking this all down on the newsletter later to get you prepared for when that comes out. The press conference, the PCE next month, because the data we get today is going to feed into that. So yeah, we're going to look at core PPI first. And we're due in 44 seconds, so let's get ready for it. So what I'm going to do is I'm going to have Bloomberg ready. So make sure everyone you've pressed the live button so you're as live as you can be. Let's get Bloomberg ready for this. So I'm going to fast forward them to as live as we can be. We're going to go over to this over here. So let me just show you everyone the screen. I'm going to make the chart a bit smaller. You can see that's refreshing now in 20 seconds. We'll get that report. Above me is the consensus, the one right above my head, 3.7%. Look at that number first right there. Let's go over to the breaking news and get those reports for you. Good luck, everyone. Get the cheat sheet and get ready for FOMC.
Price action. Equities were positive. They rolled over just about unchanged on the S&P 500. Crude getting a lift just moments ago. Check out Brent. Check out WTI. Brent crude looks like this so far this morning, approaching 106, 105.80, up by 2.3%. And yields at the front end of the curve turn higher as well. At the very front end, twos at the moment, around 370. The headlines coming out of Axios that a senior Israeli official has indicated the Israeli Air Force struck the largest natural gas processing facility in Iran, located in the southwest of the country.
Yeah, this is not
the
good,
strike
guys.
carried out in coordination with and with the approval of the United States. Those headlines driving markets in the last hour.
Because now everyone realizes that, okay, energy infrastructure is going to be a potential target for the Israelis, which have been going after top brass of the regime,
on the PPI.
and the administration, which mostly has focused on military assets and facilities.
Takes a second for the market to realize what's going on. We're always ahead of the market.
Gas field hit by this projectiles, and they were taken offline to prevent fires.
3.9% on year over year. If we go to our table, that is close to, it's warm, it's not on the hot side, but month over month. I don't know why Bloomberg is covering the war right now.
Gas futures turning higher off the back of those headlines as well as we get PPI. And Mike McKee, PPI coming in a little bit hotter than expected.
Here we go.
Well, actually, a lot hotter than expected, John. And as they say in the space biz, Houston, we have a problem. PPI comes in up 0.7% on a headline basis, which puts the headline number at 3.4%, up from 2.9% in January. These are February numbers. The core comes in, ex-food and energy, up 0.5%. That's down a little bit from last month's 0.8, but it moves the headline core ex-food and energy up to 3.9%. Take out trade services, and you've got a move up also of 0.5%, and that puts that number at 3.5% on a year-over-year basis. The composition of the numbers is not good either. On a for prices for final demand goods increased 1.1%. Prices for final demand services up 0.5%. So a lot of inflationary numbers in the February PPI report. And what's important is this, of course, feeds into the PCE numbers that the Fed cares about. We got a light CPI last week, but the categories that feed into the PCE were high. And I would imagine that that is the same story here in the PPI. And we're maybe moving up from the 3.1% core PCE number we saw in January to a much higher number in February. And all of this before the war started.
Not good. I'm going to break this down for you guys in a second.
March is going to be ugly based on some of these moves we're seeing in the commodity market. Mike breaking it down for us. Mike, thank you. Futures turning lower then. We're down by 0.2% on the S&P. Yields started to bounce to the front end of the curve going into this print. Bounced even higher now, up by 3 basis points, north of 370 on twos. That's the upper end of the range over the past few weeks. We did get around 375, but these levels are around the highest levels we've seen since last summer, which was going into a rate-cutting cycle from the Federal Reserve. In the bond market then, yields up across the curve, but particularly at the front end. In the commodity market, not helping things. 106 on Brent, reclaiming a 106 handle just moments ago, higher by 2.6%. The headlines at the last hour, Lisa, uncomfortable for this Federal Reserve meeting later this afternoon.
Adding another element, another wrinkle to the energy shock that we're facing, given the fact that now we're having facilities being directly attacked. Taking a step back, it is difficult for this Federal Reserve to say that they are looking through the oil price shock when the benchmark core PCE and now PPI are coming in on an upward trajectory, when they're inflecting higher. So it is difficult to look through it when the underlying inflationary impulse running into this was already well beyond their 2% target. And that is going to be a very difficult message for them to really deliver later today.
We'll go back to Mike and get you some details in just a moment on the underlying numbers. Aditya Bharve joins us now, the head of US economics of Bank of America. Aditya, good to see you. Good morning.
Thanks for having me.
Your reaction to those numbers, how uncomfortable is that for this Federal Reserve?
So when it comes to the PPI, what markets focus on is the components that read through to PCE, which can sometimes be quite different from the headline figures. Still, Feb CPI, after that, market said, OK, PCE is going to be somewhere, core PCE is going to be somewhere between 40 and 45 basis points. So even if we land a little bit lower than that in the refined estimate after PPI, it's still, as Lisa said, a very elevated print. The last 3 months,
Okay, guys, we'll come back from Mike McKee when he gives us the breakdown of the internal numbers, but this is not good. This is our fears. This is what we've been talking about for the last 4 to 6 months. This is why I've been talking about a bear market on crypto 8 months ago. Everyone hated me when I put that video out, and I never was certain. I wasn't coming in and saying, I know a bear market's coming 100%. I've got a crystal ball. That's not what I was saying. I was saying the data is suggesting next year, the 4-year cycle's over. There's no liquidity. Rate cuts are slowing down. We might only get 1 rate cut next year. Now we're even possibly talking about rate hikes this year. We then started speaking earlier this year, going into January, about late cycle gold and silver spike. We got the late cycle gold and silver spike. Now we're talking and we said that late cycle spike, silver to 120, and gold also continuing its move up, and then it'll sell off. And then that will cause the next wave, which is crypto finding its bottom, then bouncing, then finding a lower low, potentially in May or October, and the stock market this year heading into a downtrend. Now that's all coming together. We predicted oil at the double bottom at $55. We got a 1,000% trade on oil just a few weeks ago. And now we're looking at inflation. It was not a fluke. Last PPI report we got, when we got massive numbers, 0.8%, 0.4%, double of consensus was not a fluke. We've just got PPI today, nearly double of consensus on certain numbers. We'll break down the numbers in a second. We want to see exactly what the numbers were internally. Mike McKee will come back to us from Bloomberg, and we'll listen to that when that comes in. But we've also now got gas infrastructure being hit. In Iran today, Israel has hit that. This is not good for inflation anyone around the world. This is not good for interest rate decisions. This is not good for Jerome Powell's press conference today, because he'll be asked about the war. He'll be asked about inflation. And if he puts on the wrong tone and he doesn't sound confident, this can turn from a little 5% pullback to a 25% correction in the market. And I'm not saying that to scare you. I'm not saying that because I know it's a certainty. I'm saying that so that you are prepared now, and that your emotions are in check now, so that if that does come, you are prepared for that, whether that's you buying, whether that's you not panic selling, whether that's just getting you prepared for if that does occur. My thoughts are, I've said it, about 35% chance, in my opinion, 40% chance of a recession. Okay, let me get Mike McKee. We'll come back.
2000. I want to come back to you, sir. What are you seeing? What are you reading between the lines at the moment? Where is this higher move, this move higher, coming from?
Well, largely from goods prices up by the most since August of 2023. Prices for final demand goods up 1.1%, largely due to food prices rising. They were up 2.4%, led by a 48.9% jump in prices for fresh and dry vegetables. Now, there may be some tariff impact in there. But we also see in the goods prices a tariff drop for things like apparel and footwear. So there's a little bit of a cross purpose there, and we don't know what's going to happen once the IEEPA tariffs now are gone. But in terms of services, that's where the Fed is going to be concerned. They've been expecting that to start dropping, particularly because in the CPI, the housing numbers have been slowing. But in this case, 5.7% jump in services for travel accommodation, and that's the kind of stuff that does feed into the PCE. Also, brokerages and dealers on Wall Street, those prices are up, and that also feeds into the PCE. So we are seeing some problem areas for the Fed going forward, and it is good. If you want to look at it this way, what would the Fed do if there weren't a war on? Right now, when you see these kind of prices, they might be considering at least mentioning the idea that rate increases could be down the road.
Mike McKee, thank you, sir. Mike McKee.
They might be considering right now. If you want to look at it this way, what would the Fed do if there weren't a war on? Right now, when you see these kind of prices, they might be considering at least mentioning the idea that rate increases could be down the road.
And that's the roaring part there. If you take this data, remember, this data we've got today does not even include the oil shock, does not even include the inflation shock that's going to come to consumers around the world, consumers in the US. That's the most important market. And Mike McKee just said there, imagine, what would the Fed say? Forget about the war. What would the Fed say when they see inflation data like this, month over month now? It's solidifying. It's not a fluke. They would mention potentially rate hikes. Now, what do they do if there's a war? Well, there's more components. If there's a war, we're going to get more inflation. That might mean more rate hikes, but it also might mean growth comes down and they don't want to raise rates because growth is going to be lower and that's going to have a bigger effect on the market. So that's stagflation, and that's when there's bigger issues on our hands. Essentially, all those possibilities, whether it's rate hikes, inflation being sticky, war going on, GDP coming down, they're all different components and will work a bit differently for whether there's hikes or not. But all of them have the same outcome. The market won't like it. The market will go down. Now, does that mean I'm switching from chip gaming? What's going on? Now, does that mean I'm going to change my recession prediction?
At Chip Gaming 9292 tipped $1.99 through Super Chat. It's a shame you stole my plane.
If you guys don't get that, that's a reference from Discord yesterday. Thank you, Chip Gaming. So, am I going to change my recession reading? My recession thoughts? Again, when I made my recession prediction, the market was predicting a 10% chance of recession this year. I said there's a much higher percentage chance. and I gave about a 30 to 40% chance. Now the market is if we actually go over to Polymarket, what's it pricing in now? The war is being priced into end in June now, which that keeps being moved back. Recession. Let's go to recession US. That's now being priced at 31%. And I still think it's being underpriced. What did we jump up to? We jumped up to 37%. I think it's between 30 and 40% on a recession. And I don't think the market's priced in a 30 to 40% drop. So that mismatch in price, in my opinion, that's why I am more prepared for the downside. So what am I doing? Am I out the market? No, we've got portfolio challenge, £5,000 portfolio challenge. We're starting with it, and we're starting in, some would say, a terrible year. The market's going down. I love it. I think there's going to be opportunities, whether the market goes down or sideways or up. There's always opportunities. And right now, we've started the £5,000 portfolio challenge just a month ago now, or 2 months ago. And what we're doing, oh, we've got memberships being given away. Guys, hit the like button, comment in the chat. You might win a membership. 1978 Buckley is giving YouTube memberships away on FOMC Day. How wonderful is that? Please thank 1978 Buckley if you do win a membership. So yeah, we've got the £5,000 portfolio challenge. And I'm not staying out the market. I'm investing in certain sectors I think will do well no matter what. We're looking at consumer staples, copper, AI industry, but not the AI names, the AI infrastructure such as copper and the utility sector and the consumer staples, which will be good in recessions. So we're looking at that. Plus, if the opportunity does come, if EV tolls, for example, drop 25% next week, and we've got a crash on our hands, we'll be ready to purchase that. So if you want to see the £5,000 portfolio challenge, you can grab it. If you go over to let's just go over to Sensei.news, and I'll show you all the things you can get as part of the newsletter. You get on the homepage, you can see what we're releasing. Every single week, we give you the XRP weekly / so the crypto report every week. Every single day, we give you the morning forecast, the top 5 headlines. I mean, this is so powerful. You don't need any other news agency. You don't need to be scrolling X and just keep finding fake news. You need to get the real news. You get the top stories at a glance, and each of those stories are broken down. You get the one big thing, the number that matters, the winners and losers in the market, what's moving, the market snapshot. Each of those stories just broken down into 2 paragraphs. So it's not long, but it gives you all the information. You don't need more than 5 stories each day. Then you get the deep dive. Today we did the cheat sheet. Anytime there's data releases, we give you the cheat sheet ready for that. We give you the background, the charts, and then you get the chart of the day every single day. So that's the morning forecast. What else do you get? You get the portfolio challenge. So this is exactly how I'm deploying my £5,000, and you can see the full research. It takes about 12 hours plus of research. So you get the whole research, the whole framework, and then at the end of the report, you see what I'm adding to my portfolio. So you can see the page and page of research. Of course, you don't have to read it all, but hopefully it sparks ideas for you as well. What else do you get? You get the week ahead, and that's our economic calendar. This week, you can see what the most important things are. FOMC decision coming later today, the dot plot, the press conference, the summary of economic projections. NVIDIA's conference, on Monday. Bank of England rate decision. Micron Technologies earnings today after close. Bank of Japan interest rate decision. You get to see all of them, and then you can go day by day and see exactly what's going on. You get the cheat sheet. So we're going to have one coming out for FOMC. Everything you need to know about, oh God, the S&P 500 is dropping even more. Everything you need to know for the summary of economic projections, what time it's coming out, what to look out for, what is important Jerome Powell says or doesn't say. You've also got the net worth tracker. This is an app you get as part of it. So you can go in the whole and I'll show you. You can put in your assets, your liabilities. You can even put in your income and expenditures. You can put in when your income's stopping, when your retirement starting. You can play around with it and have your whole net worth tracker. You can keep it as simple, as complicated as you like, but as a minimum, you can just put in your assets, your liabilities, and get a picture of your net worth. Again, the way I've designed it is there's no ads, there's no data collection. I have no idea who's logging in. I'm giving a password to all premium members. That will change every few months. And you can just go in there. If you want to save your data, you can save it locally on your storage. And then what else do we have? Well, next Wednesday, we're launching our chart training course and our indicators. So that's coming out next Wednesday. And to celebrate all of this, we're giving you 50% off the newsletter. So if you want to grab it, now is the time. There's limited spots for today. So go and grab it while it lasts on FOMC day, ahead of the FOMC cheat sheet. And there you go. You can grab it there. If you click on it, go to the annual plan, you get 50% off. It works out to, I think, what was it? It's less than $10 a month. It's about $2 a week, 30 cents per edition. I mean, some of these cheat sheets are worth so much, so much information. So go grab it while you can. Let's go back to the markets, how they're reacting to, okay, look at this. S&P 500 is falling off a cliff. It was up. It's now down from the heights of this morning. It's now down 1%, exactly like the cheat sheet said. The cheat sheet said we'll drop 1 to 2% if we get PCE this bad. Now we're down 1%. Bitcoin is now also down 2%. It will be affected more. XRP down 4%. Let's see what FOMC is going to suggest. Jerome Powell speech is going to be very important. The way he answers the question is going to be very important. But not only that, we're going to get dot plots and summary of economic projections. That's going to be very important. What else do we have? So let's just compare the numbers we got with our tables to give you the exact summary of what we've just got today. So let's start off with headline. Headline month over month came in at 0.7% and year over year came in at 3.4%. So let's link that up to headline. So headline month over month, we said hot would be above 0.5%. We definitely got hot. We got 0.7, and year over year hot would be above. We got 3.4% and we said above 3.2%. So definitely we've headed into the hot category. No doubt about it. Headline, PPI. Excuse me. I didn't have enough time to mute the button. So there's no doubt about it. Headline PPI came in hot, according to our table, according to consensus, according to the market. So what does that mean? Well, it means second straight blowout. Inflation reaccelerating. January was not a fluke. January, we got terrible PPI data. Everyone said, oh, it could just be a fluke. We'll come down this month. The PPI data we got today, just 20 minutes ago, suggests it is not a fluke. Inflation is reaccelerating. And guys, how many times do we talk about inflation reaccelerating towards the end of last year? And that's what was one of my basis on the market coming down. Shall I do what Martyn does? Fact check me. How many times over the last data releases, maybe even going back to middle of 2025, if you have been here this long, how many times have I talked about the possibility of inflation reaccelerating? Have I talked about that? Yes or no in the chat? Yes or no? Verify me. Let me see if people verify me. How many times did I talk about inflation potentially reaccelerating, and now we're getting reacceleration? How many times did me and Martyn say that? Did me and Martyn say that rates, we could only have one rate cut this year? We might not have cuts. Yes or no? Yes or no? Yes or no in the chat. Did verify us? Verify me. Equities. So we got reacceleration of inflation. We got equities sell-off on. Sorry, if we get hot PPI, S&P 500 could drop between 1 and 1.5. We've already got 1% drop. Are we going to drop another 0.5 into the FOMC? Let's see how the market reacts. Again, it's going to be volatile. We might jump in 20 minutes and go up, but it's the fact the data suggests is giving us. Yes, very yes, says Raymond Zapta. Very yes. Jose, yes. The gaming, yes. Crypto, the Savage, yes. Yolanda, yes. Thank you. Yes, says Ganda. Yes, but one cut might not even happen now. Yeah, DJ Haynes, that is true. One cut might not even happen now, and it's actually getting more and more likely. Steve says yes. Okay, so we got hot headline PPI. S&P 500 already down 1%. It can go down another 0.5%. The bigger issue is this is a lower high. It can end up into a lower high, especially after FOMC if we get bad FOMC. And that would be the start of the drawdown we're waiting for. What else? Let's go over to core PPI. Where did we fall into this category? Because remember, this one's a little bit more important. So core PPI, we got consensus was 3.7. We got 3.9. On year over year. 0.3 was consensus. We've got 0.5. So we've got 0.5 and 3.9. 0.5 and 3.9. So it wasn't hot, it was warm. In the core PPI, we fell into the warm category exactly. So that's still elevated. January's trend partially intact. Mild sell-off, mild pressure, cut timeline pushed further out. So it's still not good. Cuts will be pushed further out. Hikes will be introduced. And it's showing that the trend we got from January is still suggesting that trend is going to continue. It's not as bad as if we got another basis point, another 0.1% higher on hot, but it is suggesting the trend is intact, or is partially intact. We are heading higher. the sell-off's there, pressure's there, and the cut timeline pushes further out. Could be a slightly bit worse than core PPI. Certainly could be way better, but it's warm. It's hotter than expected, but not as hot as it could be. So again, to summarize it all, headline PPI came in hot, in fact, very hot, and core PPI came in warm. Put them together, we've got a hot PPI print today. And as we saw Mike McKee say, a lot of those bits that we get from PPI, the reason the market reacts to this, because PPI is not the most important inflation measure, but the things that go into PPI go directly into PCE, and PCE is the most important inflation measure because that's what the Fed wants to get down to 2%. So if you ever heard about the 2% target, it's all about PCE. So why do we care about PPI? Well, because PPI has a lot of elements that go directly into PCE. And those elements that go directly into PCE were hotter. And the market's not going to like that because PCE, therefore, is going to be revised hotter as well. I'm going to answer some of your questions now. Let's go back to Bloomberg for a second. I'm going to give you the link for the 50% discount because I know that's going to run out by the time we hit the end of the day. So if anyone wants all those perks, you can grab it now. Let's just go to Bloomberg, then I'll come to your questions, and then we'll go over to Martyn in about 5 minutes' time. Let's go over here.
So now turning negative. Ahead of a big test later today, we do get...
Are things getting harder?
Year to date, it will be all about whether it can deliver.
Thank you. Appreciate it. Let's get straight to it. Kelly Kowalski of Mass Mutual joins us around the table. Kelly, good to see you. Your thoughts on what's happening with this Fed? Investors were already coming into the March meeting expecting a Fed on hold, and that hasn't changed post-Iran. If anything, there's less room for disappointment. Are things getting harder this morning?
FOMC day, guys.
I think so. Look, we're in the fog of war. I think the Fed's in the fog of war as well. You know, the last 2 days we've seen market strength, but we have to continue to expect this. The headlines are going to sort of drive short-term moves. And I think looking to today's Fed meeting, you know, at the end of last year, we had one cut in the dots coming into this year. We really don't expect that to change, just given how new everything is. And look, this crisis has been going on 2.5, now almost 3 weeks. So still very new, and we kind of expect that sort of more balanced approach from the Fed and not really committing, you know, one way or the other in terms of inflation versus the labor market side of the mandate.
What's the argument against the Fed putting a rate hike back on the table, given the fact that when you take a look at PPI, without stripping out food and energy, it's at the highest level in about a year? You're seeing a lot of different inflationary metrics moving upward even before this oil price shock.
It's the other side of the mandate. Right? There's the inflation side and there's the labor market side, and the labor market is fairly weak. So I think they really need to preserve that optionality, even though we are likely to see inflation prints. They're not going to say it's temporary, but if you look at the way markets have been, you know, relatively resilient, markets are viewing it as if it's going to be temporary. But again, there's the risk of that, the demand destruction side, which I think the Fed has to sort of keep that on its mind.
When do you start recommending that people start thinking about the possibility of recession more than currently being priced into risk assets?
Well, look, we came into this year, you know, data's been okay. You know, we know the labor market's been weak. PMIs have been increasing. We've seen industrial production picking up. It's, again, a little bit premature for that. But the longer this, you know, crisis, war drags out, the more we need to think about it, right? There's the first order effects of oil prices, but there's sort of the second and third order effects, which build the more prolonged this is. Again, I don't think that's priced in, where there's definitely a longer tail if we think about it. The tails are fatter now. But again, markets are really not trading on that narrative.
As Lisa mentioned a few times in the last 24 hours, how much confidence can you take from what we're hearing from the airlines that the business for the likes of Delta and American has been pretty decent, and they're projecting it to continue through the first quarter?
I think that speaks to the ongoing trend we're seeing of sort of the K-shaped economy, right? You're seeing a pull forward in demand. We're expecting airline prices or airline fares to go up. So that gives us some confidence that you know, the upper 20% spends less than 2% of its income on fuel. You go to the bottom 20%, it's 6 to 7 times that. So you're going to see more pressure on that lower end. But the question is, can this upper end withstand these higher fuel prices? Probably.
This is going to squeeze a lot of people. Kelly, it's good to see you. Thank you. Thanks for being here. Kelly Kowalski there.
Okay, this is all ahead of FOMC. Remember, we've got the inflation shock now. That was sort of anticipated but not expected, and now we've got the Fed decision due at 2 p.m. Eastern time and the Federal Reserve speech at 2:30 Eastern time. So what's that? That's about 4 hours, I guess. So we're going to be covering it live on the show. Martyn is now going to be covering the crash and his thoughts and his trades on what he's doing based off this inflation going into the FOMC. So stay where you are. We're going to be going over to Martyn in just a few minutes' time. Let me go over to the live chat, answer a few questions. Let me go back here. Why is that changed? Let me go here and I'll copy that across. Okay. The votes, 700 people voted. What was your predictions? Hotter than expected. You guys were right. You were with me. 54% hotter than expected. Inline, 30%. Cooler than expected, 16%. Well, unfortunately, we got hotter than expected. And we've just got breaking news that there's strikes on Iranian gas facilities, which is obviously going to affect global gas prices and global commodity prices. What may happen to gold today? Well, gold doesn't do well when you get interest rate rises. Gold likes interest rate cuts because it means it's more it's a more worthy investment. Because with gold, you tend to get maybe 5, 6, 7% returns a year, or even lower. And if treasury bills are paying you the same amount, no one really looks to gold. Of course, gold has its other advantages, but gold does well when interest rate cuts are going on. That's why we're seeing that. Gold is topped out, and this is what we said about gold. I think gold can go to new all-time highs. I don't think silver will. Chevron pumping, yes, Chevron will be pumping. It's obviously doing well with oil prices. Who is selling all the time? Am I the only one paying taxes, and do people not realize prices are going to come right back up? Says, I don't know what you mean about that comment. That means nothing. How the markets will react today? We'll see. Well, right now we're heading into FOMC down. Let's see. We're going to have some volatility before FOMC. We could flip this, but it's really not great inflation data. So I'll be careful on the way back up. And then it's all about what's that dot plot going to say? It's probably going to say rate hikes are probably back on the line, or at least not as many rate cuts as anyone was expected. And then we'll get the summary of economic projections. Where do they think growth is going? If we start seeing recession fears in those summary of economic projections, that could be an issue. And then we'll go over to Jerome Powell's speech. What's his tone going to be? How is he going to answer the Iran questions? How is he going to react to other central banks raising rates? That's all going to be answered later today, so stay with us for that. Yes, but even one cut might not happen now. Yes, that's true. I would like a membership. So what you can do... what is FOMC? FOMC is the Federal Open Market Committee. This is the Federal Reserve in the US. These are the people that choose whether they're going to cut short-term rates or raise short-term rates. And that, again, feeds into the global economy. So the FOMC is the day, there's a 2-day event, yesterday and today, but today's the day we get all the data out of the Federal Reserve, the central bank that controls all the money, essentially, and the interest rates in the US. We're going to get Jerome Powell, who's a Fed chair, give his speech, give his reasoning, and we're going to get the data as well, the dot plot and the summary of economic projections
At
from
Clubman
that central bank.
5887 has become a member.
Oh, you said what time is FOMC? Sorry, I thought you said what is FOMC. What time is FOMC? FOMC is at 2:30 Eastern time, 2 o'clock Eastern time. We're going live. Click on the channel. I think the stream's already out. You can see what time we're going live. We're going half an hour before. So right now it's 1 o'clock in the UK. So 2, 3, 4, 5. And it's about 4.5 hours, something like that. Sensei, you think crypto will drop hard, but Martyn's going to be live right now. I'm going to send you to Martyn because he's got his morning show going into the opening bell. Let's see how the markets will react on the bell after this inflation report, going on to FOMC day and the inflation data. Oh, let's go over here. What's Bloomberg saying?
I'm Danny Berger. Bloomberg Open Interest starts right now.
Oh, nothing there. What was I saying? Yeah, so if you wanted all of that, you can get it. The link is... someone asked for something. Oh, someone upgraded to gold. Congratulations, Clubman. You get your one-on-ones with Martyn now. You can book them in on the shows. Someone asked, well, how do I become a member? Well, if you become a member of the channel, you can press there's a money, there's sort of a dollar sign, and then you can become a member there, or go to the homepage of the channel and become a member, or use this link to become a member of the channel. So the link I'm going to give you is the members link. So where is it gone? Where? How have I lost the link? I'll show you. So what you can do is go to the homepage of the channel. I think you're talking about the newsletter, but I'll show you the YouTube one anyway. If you go over to click on, let me show you this. Click on the channel if you want to become a YouTube member, and there'll be a button here. As long as you're on a browser, there'll be a button here that says join membership, and you can become a bronze member, a Electrum member, a gold member, whatever you want. But I think you're referring to the, oh, there it is. Thank you, Martyn. Thank you. I don't know where that's gone. I'm gonna add that today. So there's the link. You can also click that link as well. If you click that link, you can become a member of the channel. If you're talking about Discord, well, Discord is where you get all of Martyn's trades, is where the community lives, is where the village is where we all talk 24/7. And that's where we're actually going to bring the newsletter community over to as well. So that's where the community lives. There's a link for Discord as well. You can press the Discord link here, join the server, listen to the video, and then you can choose your membership type. I think it's either $3.99 or $4.99. It's a paid server. We keep out the bots, we keep out the scammers, and that's how you do it. If you're talking about the newsletter, then here is the link. That's the free trial link. And if you want the link for the 50% offer we're running right now, I don't know if there's actually any left. Actually, I think there is, because today's FOMC day. We've upped the limit for today. If you talk about the newsletter to get all those perks, Chip Gaming.
At Chip Gaming 9,292 tipped $1.99 through Super Chat. My poor plain dreams.
Thank you for that. That's a reference to what we were talking about in Discord yesterday. If you want the newsletter, I would suggest you get it today because it's 50% off, and the link is in the live chat, and then you get the report ahead of the FOMC, as well as all the other perks, and that's there. Martyn will be live in the next few minutes, so I'll keep an eye on that. And in the meantime, let's go back to Mike McKee from Bloomberg discussing more about this inflation.
In Washington for the Federal Reserve decision. Mike, what did the data look like?
Data are ugly, Danny. A 0.7% rise month over month in the producer price index for February puts the year over year number at 3.4%, up from 2.9%. The core, and there's two different cores with PPI, but we do the X-Trade one because of the way this is put together, up 0.4% in January, now up 0.5%, 3.5% rate on a year over year basis. And this tells the Fed that there's still inflation pressure out there, particularly since goods prices went up 1.1%. Maybe that's tariffs, but service prices were up 0.5%. And these are February numbers. This is all before the war. And you have to ask today, if the Fed were meeting and there were no war, what would they be doing? What would they be talking about? Because the Fed looks at the PCE index, which is influenced by data that comes in from the PPI and from the CPI, both of which have been hot. And look at that blue line there. That is the PCE index that is the PPI index. The yellow line is the PCE, and it's been following the PPI higher. That is probably going to come in significantly higher, and the Fed is going to be in a position where it really can't say that it wants to cut interest rates. So when we look today at the dot plot, which is really the only new news we'll get since the Fed's not going to raise or lower rates today, are they still pricing in any rate cuts this year? That's going to get a lot of interest. You can see there that they were, as of their last forecast in December, they were penciling in 1 for the year. And now, after the news from Iran and the news with the PPI, traders have priced out any for the year. So where's the Fed on this? 2 o'clock this afternoon.
Yeah, we'll be looking forward to that. You know, Priya Misra was on with you, on Bloomberg Surveillance with you earlier, Mike, and she said what she's looking for from the Fed is how they view higher oil prices and higher gas prices, working their way into core inflation, because, of course, the core doesn't include fuel or food prices. But what are those knock-on effects? What are those second-round effects?
The second-round effects are that there are fuel price pressures in all kinds of products, because basically any truck that moves this stuff or train has to use fuel to get there. So that increases prices. Plus, petroleum's used in plastics. Petroleum's used in pharmaceuticals. It's all over the place. It takes a while to work through that chain, but it does get into the into the prices of many goods in the United States and even services. It'll be something that the Fed is going to be watching at this point because they have no idea how long all this is going to last. Their instinct, look through this. But if prices stay elevated for quite some time, then it does have second-round effects they may have to deal with.
All right, Mike McKee, Bloomberg's international policy and economics correspondent in Washington for the Fed meeting today. Don't miss our special coverage of the Fed decision that kicks off at 1:30 p.m.
There we go. We will be covering the Fed. We will be looking at all sources. So stay with us. We'll have Bloomberg. We'll have the analysis behind the scenes. We're going to be bringing you all the data up to date, the summary of economic projections, the dot plot, the analysis. I'm going to be analyzing Jerome Powell. Me and Martyn will be live on this together. So you've got both of us for FOMC. It's going to be the best FOMC coverage you've ever seen. So join us for that. Now we're going to be moving over to Martyn, who's just gone live. So thank you everyone for tuning in to the inflation report. We will continue to cover the data, and this is why we continue to cover the data, because we're getting better and better at understanding the trends ahead. And we got it right again. Inflation reaccelerating, war causing oil prices to go up, FOMC stuck in a difficult stagflation environment. Are they going to cut rates? No. Are they going to raise rates today? No. Are they going to pause? Yes. But what we're looking at is what are they going to do this year? And no longer are we talking about 3 rate cuts, 4 rate cuts, 2 rate cuts. We won't even talk about that. We're now going to be talking about no rate cuts this year. What's going to happen in 2027? I assume the dot plot will suggest no rate cuts this year. And that could be the talk of the town as well as inflation. So let's see. We'll continue that coverage with FOMC later. Martyn is going to be live. He's live right now. So if you stay where you are or click on the link that's pinned to the top, you can go over to Martyn, see how he's playing this inflation trade, see what he's doing with his money, and you can go there so you can get prepared for the FOMC coming up. Once again, if you want to get the 50% sale, this is perfect time to get it while you're waiting for Martyn's countdown to finish. Click on that and then come back for Martyn. And if you stay where you are, you go directly to Martyn's stream as well. The link for Martyn's stream is pinned in the comment section. Until next time, I will see you all back later today. Why? Well, because I'll be live with Martyn for FOMC. Until next time, take care of yourselves and each other. Bye-bye.